not winning 90% of your new business because you have some sort of incredible value.
I'm going to take a bit of a different angle.
I've got a budget this big. I'm going to give it to you because you have a really killer plan.
You give a Red Bull to a turtle, what do you expect?
I think that's a dead turtle. So let's move on to...
E-break. Cheers.
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 Does your current premium finance company lock you into long-term agreements? That's because they don't want you talking to us. At IFS, we win your business the good old-fashioned way, with customer service. I know you don't always have to use a premium finance company, but when you do, you should use IFS. Cheers.
Hi there, and welcome to another episode of the Digital Insurance Pint podcast. As always, I'm your host, Tom Reed, and today I'm joined by my colleagues Adam Mitchell, CEO of Mitch Insurance.
Hello.
And Steve Earle, CEO of Cheap and Bald Insurance.
G'day.
Jeff Roy is off today. He is experiencing a bout of Montezuma's revenge, so he will not be joining us. We do have a fantastic guest, though, to round out our AI series this year, and that is Stephen Billyard, CEO of Billyard Insurance. Hey, Stephen, how's it going?
Pleasure to be here. Thank you.
Stephen, so why don't you just open the kimono fully? Talk about yourself, talk about Billyard Insurance Group, and give us the skinny there.
Yeah, you bet. Well, I'm Stephen Billyard, CEO of Billyard Insurance Group. I'm a golfer, skier, mountain biker. I would say in that order of skill and ability. Spend a lot of my time.
CEO first?
CEO first. No, CEO third. I'd say in ability, we'll go fourth. I have a master's degree in business and started my working career in the golf business. Was a general manager of a golf club for many years that my family owned and operated. And left that to spend several years with a career as a ski bum, living out in Revelstoke, BC, managing some hotels, and then got into the insurance brokerage business back in 2012, roughly. And that was out of necessity. I was a ski bum for a number of years and broke and needed to do something with my life. And so that was when I decided to get into this business. And my parents had been in the insurance business for many years with a brokerage called Sandy Billyard Insurance Brokers. They sold that brokerage to Johnson Inc., which at the time was owned by RSA, which then got bought by Intact, which then Johnson got folded into their Bel Air product, I think. And so that no longer exists. And so I started my business there using their connections and their contracts and access to the marketplace to create what became big. And at the beginning, I had 3 contracts, a Wabisa Mutual contract, a York Fire and Casualty contract, and a Jevco contract. At that time, they were just doing motorcycles and non-standard auto. And that was where I got the business from. Wabisa is no longer with us, and York's now Unica, and which is a key partner of ours. And so when I kicked off big, the original vision was for an online, digitally enabled call center style insurance brokerage. At that time, that's where I thought was the best way to enter the marketplace. Something similar, I think, what everybody else in the call is into. And then it deviated on its way to be more of a digitally enabled franchise style brokerage, where we expanded our brokerage across Canada, focusing on tech enablement, broker empowerment, and that journey brought us to where we are today with 85 locations across Canada and 4 provinces. And that's the journey we've been on.
So you are a franchise player, obviously. So how do you keep those franchises operating more or less in a common way? Like, I'm sure there's some technology that you're using for sales and customer experience and so on. Can you describe some of the tech that you're using to kind of bind all these disparate groups together?
Sure. I think when you're managing any franchise business, whether it's insurance or selling coffee and donuts, the key to having consistency is very strict and tight guidelines in terms of how you're expected to operate at a franchise level. And so we hold our brand very tightly, and we ensure that everybody is consistent with brand and operational guidelines. And then when it comes to the insurance brokerage business, obviously the most unique challenges there are with the focus on underwriting and control. And so how do you manage that at scale? And so, early on, we focused on managing that through an underwriting apparatus. So I built an apparatus of over 100 underwriters, and their job was to review and manage and maintain quality control. And as we scaled, I discovered that, even managing the skills of 100 underwriters is challenging. And so we found we had some weaknesses in our underwriting apparatus, even with such a large commitment of resources to that program. And so we built a digital solution. We call it Project Precision internally here. And it is an underwriting system that guides the brokers through the underwriting journey at various stages of quote and application creation and bind, pre-underwriting the policy before it's bound. And that allows us to have an enormous amount of control over the underwriting process at a point where now you almost can't make a mistake as a broker. And that technology was designed. So not only did it provide strong underwriting control, but it also shortened the process from quote to bind by over 75%. So it's a very quick process now.
So if I'll just jump in here. Now, I'm aware, not in any detail, but you had some market challenges. Was your refinement of your underwriting process, was it in response to that, or how did those two things sort of correlate, and how did you eventually manage those challenges that you had?
The Project Precision wasn't so much a response to that. We began that project a couple of years ago when we saw that at scale we needed to be better and do better at our underwriting. The last couple of years for us have been unprecedented growth. And I don't think anything in the country has ever seen organic growth as fast as we've done it. It was larger than I ever conceived it. And that kind of scale presents really unique challenges. And so there were those along the way that even cautioned me that in our business, you can't grow that fast. I think, Adam, I remember a game of golf that you and I had many years ago, and I think you said the very thing. You said, you sure you can grow that fast and keep it under control? And I took that very seriously. And so that's why I built the enormous underwriting apparatus I built of our 100 underwriters to control scale. At that time, markets were begging for more business. No one wanted to slow down, so we kept moving. And, that underwriting apparatus faced challenges as we moved through that without the kind of digital enablement of our technology platform. So we saw that coming. We began this project 2 years ago, but in 2023 rather, we were struck with a perfect storm. And the perfect storm was at scale. That underwriting apparatus was having a very difficult time keeping up with an enormous volume. We had, at our highest day, we had 1,000 policies sold in one day. And you can imagine the potential exposure of small mistakes that aggregate and compound. And so our underwriting apparatus was challenged. You layer onto that an auto theft crisis that we were just disproportionately affected by because we were writing all the new business. So we were writing a disproportionately large number of newer vehicles. So we were hit hard by the auto theft crisis. Layer on that the inflation crisis, which pushed up loss ratios. Layer on that the climate crisis, which created a little more and frequent incidences of weather issues that increased loss ratios, and then the regulatory environment, TAC and FSRA not allowing us to underwrite and manage our business the way we were. You put that storm together with enormous growth,
plus earned loss ratio lag. Whenever you have that volume going up, your earned is going to lag, significantly, but they'll fully index all the losses.
You got it. And so layer all that together, and then we faced some capacity challenges. Fortunately, we had a number of our key partners that really stuck with us through this process, and we had already built Precision. And so Precision kicked in for us in early 2024 when we knew we were putting on some of the best business we could ever possibly be writing. And so those markets that really stuck with us enjoyed a year of enormous growth and business that's performing. And so those markets have kept us thriving and kept us growing, and we very much appreciate it. And they took the time to get to know our precision technology. That's what real market partnerships are about. They looked under the hood with us and said, okay, what are you doing? How can you control things? We showed them, they were convinced, and then we grew like crazy with them. And so we've had a wonderful year with our key partners. We're managing those other relationships and looking forward to getting back on our feet in regular business into 2025 here.
So Steve, what'd you do with 100 underwriters?
We still have a number of them. We reassign them into other aspects of the business because our business is growing so fastly as it is, or so quickly rather as it is, that we always have needs for great people. So it became sort of the internal cultivation for our key staff. So we move them on to promote them into other roles. And we still do have an enormous amount of human underwriting. So we still double check and upload all the policies. So we upload all the policies on behalf of our brokers. So that team is largely responsible for that process, which we have not been able to utilize AI or any other technology to do. The robotic process automation to market portals is not really anything that we think we can do. I don't know if anybody's out there successfully doing it, but we didn't see a path there.
So you have centralized, quote unquote, processing department now. Was that the case before?
Yes, it was. Yeah, we've been doing that for a number of years. Yeah, we've been doing that for the last 8 years.
Stephen, you and I were chatting recently, and you shared with me that you have gone what, in my opinion, is a bit of a different route with AI, because people are talking about ChatGPT, Gemini. There's some homegrown organizations in Canada that are doing AI, like Koios and Sonar and Semiar and a bunch of other places. You've gone with IBM Watson, which is a name that I think I first heard in high school when it beat somebody at chess or something. And I haven't seen IBM do much of anything in the last 15, 20 years. And all of a sudden you come along, you're doing some really cool stuff. Can you dig into what it is you've done with Watson? How did you get involved with IBM? What are you doing with Watson? Sort of what do you see as the business outcomes? This is so intriguing to me that you've gone this completely different direction than anybody else has.
Yeah. So when we think about AI, I think it's important to talk about what it is that we're talking about when we say AI, because I think everybody sprinkles AI on the plate and calls it cake. And so what is it, right? And that's what drew me to Watson was helping us understand exactly how we wanted to use AI and in what areas. So when I think of AI, I think of a collection of concepts. I think of robotic process automation. Well, not technically AI. It's kind of the granddaddy of AI. It's computers doing human tasks. You have generative AI, which you can use for document interpretation, document creation, image generation, image interpretation. You have retrieval augmented generation, which is the short form for RAG, which is interpreting large sets of data and then being able to produce reflective inputs on that data. You have your large language models and your natural language interface, which is like the chat that we use with ChatGPT and other things. And then you have workflow automation. And so all of those ideas together, and there's many more, that's not a comprehensive list. What drew me to Watson X is they've created a platform, an orchestration platform that pulls together all of those concepts. And so when I'm trying to create automated workflows for any process, whether it's a new business process, a policy change process, I'm able to touch whichever one of those AI aspects I need. So if I have a workflow that requires in the background an RPA, I can build it on the Watson X Orchestrate platform. Or if I have a step in my process that needs to read an ownership and determine if it's a valid ownership and if it's cross-references necessarily with the policy we've written, I can touch the generative AI piece. Or if I want to upload a company manual and train my custom model on that company's manual, and then have that manual throughout the process be called upon for underwriting references. So for example, I can create a form where if I'm keying in a policy change and I add a property that has lead pipes, it's going to summon the underwriting manual immediately, and it's going to notify the broker right away. Look, Intact doesn't accept this property with lead pipes. You're going to have to find another carrier. And so these are the sort of things you can build in. And so when I met the team at IBM, I took a very long time working with them to determine, before I decided to go down that road, whether or not they could build and would build what it is that we needed. And there are a lot of smart people at IBM. I think IBM has this reputation that they're a slow mover. And in some ways, I think that can benefit them in being enterprise grade and being stable and having a platform that works. And I worked with the IBM team to develop a proof of concept of what it is that I imagined. And they blew me out of the water and what they were capable of. And then they handed me the platform so then I can build it myself. And so I have a team that works with me now to build on the IBM platform ourselves.
I don't know if you can speak to this, but I have an impression, never having priced it, that IBM would be one of the pricier options of things. And it's probably also one of the older and more mature ones out there. So it probably lets you move a little faster and have some more confidence with it. But what can you say about that? Is it a platform that you'd recommend others look at, or?
I think for our uses, it served our purpose because we're doing it at such a large scale. So there are some larger upfront costs, but where I found that it made the most benefit for us were in the consumption costs. So when you're thinking about using an AI platform, there's going to be some base licensing costs, and IBM was a little higher than others on that base licensing cost. And then there's consumption costs. And so most of the other AI providers do that in the form of what they call tokens or messages. And so every time you call the AI, you consume power, you consume AI power, and they charge you a penny or a couple of pennies every time that happens. And so we were able to establish a pretty acceptable token price so that at long term I could see the business scale. My fixed costs on the license are what they are. And then as I scale, I'm comfortable that I can scale within that cost framework. But for a smaller brokerage or for a smaller operation, I think I'd consider maybe examining some of the other platforms. There's AI Studio from Microsoft, which is solid. Google has a platform that you can use that we haven't really dug too much into. Claude has some exciting products as well. So I think choose one that suits you and suits the needs that you're trying to achieve in the scale of your business.
Steve, what broker management system are you running?
So we're currently on PowerBroker as the underlying system for us, and which is woefully inadequate for what we do. So we don't use PowerBroker for a lot other than just being the base system where downloads and transactions occur. And so we have a front end that our brokers live in, which we develop as a proprietary system we call Big Leads. And so that connects to PowerBroker and connects to our Watson platform to manage that front end for the brokers. And so we're constantly building out that platform with a goal of getting off of PowerBroker altogether and transitioning over to Actuarius, who has obviously acquired PowerBroker as our underlying platform that can scale with us.
Did you say Big Leads was your front end?
Yes, that's it. Yeah, so it does lead management, it's CRM, it does our entire precision process. So all the new business flows through there, and all the business is underwritten through that process now. So it's not a full BMS at this point, but we intend to get it there. So we're adding features. So some of the brokers still have to go into PowerBroker to do some policy change and some notations and things like that. But
so you've gotten yourself 8/10 out of the BMS world. Why even go back? I mean, I get if you want to maybe upgrade your database, your accounting, your download to Actuarius, but why not leave users inside the modern web-based Billyard or Big Leads?
And that's our goal, is to work exclusively in that platform. But I still think you need an underlying platform for data integrity, for market connectivity, downloads, for accounting. I didn't want to build all of those things into my own platform because I think that lift is, I think people have tried and failed at building that. I don't think it's impossible, but I looked at that and said, what I really need to know is that what's underlying the foundation of my data is a platform that I can trust and scale with. And then I can play around in the front and build custom workflows on a skin that sits on top of it.
But if you've reduced PowerBroker to simply the download and accounting and policy doc holding, who cares? Like, why not leave it there? Or you just want a better database? Interestingly
enough, the challenge that we're facing with PowerBroker is that their user codes are only 3 characters, and we're already at 1,100 users. And so I've had them add in $ and ASCII characters, but there's a limit on how many users you can add to the platform. And so I'm running out of codes. And so if I don't get a PowerBroker, I'm going to run out of users that I can add to the platform. And so we thought about splitting it up and doing other things, but with Actuarius sitting there in the background, and they're a great partner too. And, they're innovative. And so I felt that they were a good platform to grow with. But trust me, would I prefer not to have a BMS license to pay for in the background? Yes, if I didn't have to, but I felt that we had to do that.
We started replacing the database from the FoxPro database over to a SQL database, and we just have sort of an hourly scrape that converts over so that you can do all your web-based modern interfacing with that. Going to the new BMS does just give you a modern database, so you can skip that whole step.
That's right. And they also, Actuarius also cracks the APIs wide open. So you can connect and talk to Actuarius in whatever way that you see fit. And also there's rating that's important too. And so there's APIs to the rating as well. And so if you want to get off of Applied, we have a very heavy and large server environment, a cloud server environment that we currently sit in, and it's got to host Applied rating services. And so I don't want to have that. I spend over $1 million a year on that server environment. And so then the applied licensing on top of that, it becomes very costly and heavy. And so I want all my rating, all my operations in one system. And so that allows me to skin on top of rating and touch those APIs as well.
If we go back and talk about AI and we look at the majority of other brokers that have not got anywhere near as into it as you have, when you think about some of the processes within a brokerage that can be bolstered or cost cutting with AI, what would you suggest to other brokers they start with? Where would you be the first sort of opportunity that you would look at?
Well, I think, simple stuff. The low hanging fruit is Copilot and GPT. And I think that can give any brokerage a flavor of how they can begin to integrate with AI. You should be using Copilot to write for you, to manage your emails, to create presentations. But Copilot also has a more sophisticated underlying engine where you can train it RAG models. So you can teach Copilot all of your underwriting models all of your underwriting manuals for the carriers. And it can call upon those as you're writing emails, and it can call upon those as you're creating documents. And so I would start there with Copilot. We use it to transcribe all of our meetings. You can have Copilot attend a meeting on your behalf and give you results of that meeting if you're late or if you can't make it. So tools like that are really low hanging fruit. ChatGPT, I use it as a thought partner. When I have a complicated idea or a complicated letter I have to write or a complicated policy I have to create, I work with it back and forth. And so, like, for example, one of the challenges that we were trying to solve was that, our brokers are often using their cell phones. They're getting text messages from their customers. How do I get those into my BMS? And my brokers are supposed to screenshot and put them all in or divert them to email, but that doesn't always happen, which creates an E&O exposure. And so I went to ChatGPT and I explained to it who I am and the scale of my brokerage and what was going on and what I was trying to solve. And it gave me 4 platforms and explained what they all did that can integrate WhatsApp with different technologies in my Ring Central platform to integrate these platforms. So it helped me think through a solution to a complicated technical problem that I had. And so I think those are great places to start for brokerages. If you're a more sophisticated brokerage and you have development capability or some sort of platform capability, you can easily touch the AI of Microsoft AI Studio to validate documents, to interpret auto pluses and MVRs, to read ownerships, to validate the validity of like alarm certificates and things like that. So that's how we're using some of the tool is like you have to upload an alarm certificate to apply a discount. Well, we normally have to have an underwriter look at that and determine, is this a valid alarm certificate? Is it the right address? Is the date correct? Is it a Canadian company? And so we can train the model to just look at that for us, and we don't have to have a person look at that.
When you implement some of this new stuff, there's humans, your franchisees, their staff, your staff, that are impacted when you make changes because of technology. How do you manage that human element of change? How do you go to your team and say, good news, we're all going to do this, sci-fi Star Trek stuff? And I'm sure half of them are like, what the fuck are you talking about?
I think the most important thing you can do to manage change is make the technology user experience so intuitive that it manages the change itself. And so we have a whole generation of people here who are used to using systems that give them a track to run on. So I have to fill out ABC, then I click next. If I don't upload this, then it won't let me go to next. And so we built a UX that solved that for you. And so when the brokers picked it up, it was very easy to transition. We launched our precision platform, and in 30 days, I had 1,000 users go from never using it to using it efficiently. And so part of it was because the workflow was so smooth and clean. And then we also, we have an LMS that we create video training on. So we created a live video demonstration of how to use the platform. We deployed that to our brokers. We tested them on its use. And so that helped a lot, but hopefully the tech works so simply that everybody just understands it. And I think that's got to be the trick. And it's the biggest challenge facing the insurance brokerage world right now. All of us probably have inexperienced CSRs because there aren't any experienced CSRs to hire. And then you sit them down in front of Power Broker and Applied and 14 different market portals, and then all the workflows that don't fit into that workflow, and they have to figure it out. And it's very difficult to train people on that. It's much easier if you build a beautiful UX that they can just walk through and prompts them intuitively.
As you reflect back on the last, the 10-year overnight success, what's the good and bad of this story and this model?
Well, I think certainly any model at scale is going to face trouble, right? Whether you're dealing with 1,000 people in a franchise model or 1,000 brokers that you've scaled in a digital model, training and creating workflows for that is always going to be a problem. The franchise model does create unique challenges on that, but you also have a lot of power there, because when you have franchise partners, you have people that are really deeply invested in their own success that can be trained to manage and lead. And so I think it's easier to, on some level, manage those kind of franchise owners, broker owners, because they're skin in the game. They're committed to it. But technology is the key. I think anybody who's lumbering into this, as I did 10 years ago, needs to be very cautious about creating the right kind of technology workflows that can keep the train on the track, so to speak.
I don't think scale. I'm not convinced that scale is what sort of caused the issue so much as when the tide went out, you were the tallest blade of grass standing up. Like it felt like most everyone had the same problem. You just had it 100x. And so when the executives had to go out and start mowing the lawn and fixing their business and profitability, there you stood taller than everyone else while everyone looked at their shoes and didn't take phone calls.
That's right. We were out in the front of it. We were definitely the tip of the spear. And what it meant was we could be the tip of the spear for solving the problems as well. Because if there's a problem, and we all have problems in our brokerages, consistent problems, it happens times 100 with us. And it did. And so we looked at it and said, okay, there's the problem. And how do we solve it? And so then we solved it at scale. And we're finding that a lot of the solutions we've created, now our market partners are going out to their other brokerages and saying, you've got to do this, or you have to do something about this, because if it's happening to Big times 100, it's happening to all their brokerages times 100. It's just a little less felt because it's spread across 100 different brokerages.
Given the level of AI that you've implemented, what's your gut on how far out you or we could be on virtual agents, like getting to the point of binding without human intervention? And I mean, we've talked about, the consumer's been one where I'll do it online, but I get to the 90% of the way through and they want to talk to that human. I think we'll get to this point where that, they'll be more comfortable talking to an automated attendant that knows what they're talking about, can make them feel comfortable. What's your gut on that, and where you see things are going that way, Steve?
We are far closer to that than I think anybody realizes. The technology is already there and it already works. It's just a matter of putting it all together in a comprehensive way that works. If you want to go play with something, I mean, the customer won't know that they're not talking to a human, and that the voice AI now is so good. Go to bland.ai and put in your phone number. It'll call you and go have a conversation with that technology. And that's just an AI driven web telephony platform. And you can have a dialogue with this thing about your weekend, about golf, and about insurance. And even untrained, it's a brilliant conversation. Now imagine training your custom model with all of your underwriting manuals, training that custom model with all of your workflows, giving it access to your full data set, giving it access to the Rebo licensing courses, the CABE courses. So train that model to be an expert broker. And it is going to be doing the job of a broker from a sales and service standpoint so much faster than anybody really imagines. And then the rate of change is so good. This is just off the shelf today. And I'm someone's building it right now. We're trying to build it. It's not necessarily going to be an easy build, not going to be a cheap build, but that will be, in my opinion, will be here before 5 years is up.
I'll say it actually does exist today, because we had Mohammed from Koyos on the podcast, and I've tried it myself. You can call a phone number, and I don't live in Quebec, so I'm not going to be getting Quebec auto insurance anytime soon, but because that's what they had it set up for. But yeah, you can call an AI, talk through the whole process. It asks all the questions. It accesses the rating APIs. But here's your price. Do you want to bind it? Like I say, it is Quebec Auto, which is obviously a simpler product than some others, because there's a whole bunch of other regulatory issues and carrier issues and whatnot that people are going to have to fight through. But the technology already exists.
For sure. And actually the barriers to entry are quite low. Like we have Claire answering the phone after hours and taking overflow calls, collecting information to do a quote when we don't have somebody available. And man, she's good.
I think the interesting question that will come from that is the regulatory question about, a live agent or an AI agent giving advice to a customer. And the challenges I think the regulator is going to face on that are, you can train these models so effectively that they're going to be better than humans at ensuring that all of the right disclosures are made, that all of the right conversations are had. You can guarantee that it happens. And so the regulator is surely going to look at that and say, well, you don't have a licensed person speaking to your customers. But Sonnet doesn't have a licensed person speaking to their customers when you do it programmatically, when you click through a workflow and buy an auto policy. So,
yeah. And they're not getting advice. In that one.
Well, there's kind of advice. It pops up and says, hey, we think you should have $2 million liability, but it's not good advice. It's not reasoned advice. And so I think the regulator is going to have to turn their mind to outcomes and not inputs and say, okay, our job is to make sure consumers are protected. And so is the system working? Is it reducing complaints? Is it serving the customers better? Not, we don't like that it's a robot speaking because we don't understand it. And so that's going to be an interesting shift that the regulator will have to make.
I think you need to have the performance sort of bonding angle or E&O angle of like, no. It's even like if you want to put your bot that is going to pass the 100-question multiple choice Rebo test, no problem, on the line, you're taking the consequence for that advice, good or bad. Right. And it's not even just advice. It's going to be data pass through. It's going to be data out of here. It's going to be, binding errors. And why should not the same system that we have now of E&O apply? Like, we already have a framework that governs this just fine. And there is nothing about the current regulators' framework that would ensure a human does a better job than something else can 24/7. So far as protecting consumers and response rates 24/7, like, don't even try and regulate this. Hold strong on the consequence of the result. Like you said, if they try and get in and understand and certify one angle or another, that's going to be such a mess.
One of the only challenges I see with it, though, is compared to humans, if there's an error, if there's a piece of bad advice, if you didn't teach it correctly on one element, it's a global error. Right now, it's not one person was screwing up, not adding 43R to policies. You've got none on thousands of policies until it's discovered, that sort of thing. I don't know. I'm just thinking out loud here, right?
The mapping out isn't as hard as you think, though. It's not, you don't think programmatically. You don't think of all the possible outcomes and teach it the outcomes. You teach it the concepts the same way you teach a human the concepts. And if it makes a mistake, you fix it and it never makes the mistake again. And so you can move towards a more perfect system to a point where I think the system, even as it stands today, is smart enough to almost be perfect. And so I'm still going to bet that my AI is going to, I don't have it yet, but the AI that we're hoping to have is going to be smarter en masse than my brokers. And Watson addresses this in some ways as well. So, the big question is about hallucinations and about giving the wrong information, giving it something that you don't teach it. Watson has a custom model, a closed model, that is called Granite, and it is guaranteed to not hallucinate because it only knows what you train it. And they actually will indemnify you against loss against a hallucination because they're so sure that it'll never hallucinate. And so as these models improve, you're not going to have to worry about broad-based LLM hallucination, gathering maybe training information from disparate sources.
That's a great point, because I know there's a number of tools on the market marketed to insurance organizations that are based on the public version of ChatGPT. And it's got its own issues around it. And insurance is very, very specific, right? I mean, if you can interpret it, if you have a human interpreting, it's fine, right? I've done a few things where I've looked at the outputs and I'm like, oh, that's actually wrong because I understand it and I can fix it and I can interpret it and get the right answer, when I put it on paper, so to speak. But if you're just feeding that through a telephone to a customer who doesn't know that, then yeah, you're hooped. But if your underlying source is sort of has walled all that stuff off and it's only the insurance bits and pieces in there, then yeah, you're not going to have these weird hallucinations that a public model is going to have. But there are a lot of tools out there that are based on those public models, and they're going to cause issues at some point.
I think that's a big risk right now, is because I don't think everybody understands what that risk is. And you've got people playing with AI right now. So whether you know it or not, your brokers are probably using AI right now to underwrite policies. Someone's probably dragging and dropping an Auto Plus into ChatGPT saying, let me know how many claims and convictions are on here, not realizing that it's this incredible data exposure, probably violating your agreement with CGI. And if you don't have policies in place and training in place to prevent your brokers from doing that, they're probably out there doing it.
So I was going to ask you to take out your crystal ball and talk about the future of AI. And I think we've actually dived right into it. So besides, killing all the humans and replacing them with AI brokers, regulatory issues, all the stuff we just talked about. What else do you see coming down the pipe in the next couple of years, AI related, that's going to be, really different than what we might think is happening?
Well, I think broadly speaking, the insurance distribution is going to dramatically change in the next 5 years. I've always maintained that even pre-AI, with the consolidation we see in the marketplace right now, the landscape in the future is going to be a handful of very large generalist brokers who are able to adopt this technology as it unfolds. It's going to be a handful of directs that do their business like the directs do. It's going to be a handful of your enterprise level commercial players, your Aons and your Marshes that handle the major complex risks. And there'll be some niche tech players. And I think if you're a brokerage that's sub 100 million right now, hit the eject button. It's time to get out, because the consolidation's coming, and it's coming for everybody. If you don't see a path to getting over that threshold, to me, that's the threshold of relevance. And then the 5 years ahead here. And I don't think small brokerages, these valuations that they're getting today, are going to exist in the future, because just because you have a $40 million book of business, that has value today. I don't think that has value in 5 years. What you need is distribution, technology, lead generation on a massive scale. Otherwise, those values aren't going to be there, in my opinion.
Is retention important to your brokerage? Of course it is. That's why at IFS, we have a cancellation prevention process. Want more details? Give us a call. I know you don't always use a premium finance company, but when you do, you should use IFS. Cheers.